Good afternoon, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, focus on small caps. So today was an interesting day in the markets. Stocks essentially closed the day flat or fractionally higher in the case of the S&P. But the Russell 2000 was fractionally lower, which really caught my eye because the collapse in the 10-year Treasury today really suggested to me that small cap stocks were poised to rally. And had they rallied, it really would have been no surprise given where we are on the current glide path. And as the rational trader, attempt to identify our next glide path. And that's how it is in trading. We're always moving on to the next thing. We can't sit back and rest on our laurels. The glide path of retesting market highs has really served us well. And in the case of the NASDAQ and the S&P 500, we are solidly above the 200-day moving average. That is not the case with small cap stocks. You can see here on this chart, the 200-day moving average is something of an elusive target for the small cap index. Now, why did I think small cap stocks would rally today with a collapse in the 10-year Treasury? Well, generally speaking, lower interest rates are very positive for smaller companies that need to rely on capital markets to fund their balance sheet. If funding is expensive, that eats into their profits and collapses their margins. And really, with a small cap stock, the margin for error is really not that great. So, with falling rates, and let's hope that the economic data today really is a wake-up call for the Federal Reserve. I've been trying to, slap these guys upside the head for many months now. Trump obviously has been doing the same thing, but boy, they're just not getting the message. The U.S. economy is like the Titanic. So waiting for the economy to collapse and then trying to steer the ship is essentially baking into the cake 3 to 6 months of economic pain that is entirely avoidable. So we had the ISM services number below 50 should be a real wake-up call. You also had the ADP jobs report that was worse than expected. Now, we get the Labor Department report on Friday for the month of May. We'll see where that number comes in. But again, falling interest rates is, economically speaking, a good thing for small companies, and investors have room here to push small caps higher. It's where I would look for the next glide path as far as identifying arbitrage opportunities. It didn't quite work out today, by the way. You can see there was a nice spike at the open. But then the collapse after the S&P Global Services number was the first data point to miss, and then at the top of the hour, we really sold off when the ISM Services number came in, not only worse than expected, but in contraction territory. So I would have thought bad news is good news. Didn't turn out that way. Look for it tomorrow. So if you want a clue as to how to trade tomorrow, there it is. I'm going to be really keying in and honing in on small cap stocks as some of these other indexes look to be somewhat exhausted given the overbought conditions and a move that has taken us pretty much back to historical highs. That's all I have for today, folks. I'll be back tomorrow with another video. This is JD for The Rational Trader. Take care, everybody, and we'll see you all next time.